What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I'm going to talk about a property on Solomon's Lot at solslot.com. This is a platform I don't talk about a whole bunch, but I do have a playlist on my channel, so if you want to see the other videos of it, you can just check the playlists. One of those videos is an interview with one of the co-founders of Sol's Lot, um, who goes into great detail in that video about what the DAC is, and which is what they call your pieces that you own, and what that ownership structure looks like. But just in very simple terms, there's a homeowner trying to sell this property in real life. They need to raise some money. In the meantime, they sell a piece of their equity to us as a discount. Our return comes from when they sell the property in real life. They redeem that money, or they could pay it off in other ways. But the most likely thing is a sale, and us getting paid back the full amount, not the discounted amount. And so that's very, very oversimplified as far as like what that interest is and whatnot. But that's how it's working in practice. But yeah, you can watch that other video if you want a little bit more detail. Or Matt's really active on. They have a Discord for Saul's Lot specifically. He jumped into ours and offered to answer some questions. And also he's really active on X. Um, And I found, I think actually too, he's got a way to set up a call with him through the website, or at least he used to. But anyway, they are making a lot of changes to the website. I think in prior videos I told you had to have a Gobi wallet attached to it in order to hold your DAC. But now you can have a Sage wallet too. And if you're part of their beta, it looks like there's some other wallet options as well. It looks like they're working on making it so you should be able to hold your DAC in a number of different ways. And then as far as payment, you can pay with crypto, but you can also pay using their fiat checkout, which goes through Stripe. So the last one I did of these, I bought with a credit card. It was a very simple process. They didn't charge any additional fees when I did that, which I was really surprised by. Um, Pleasantly surprised, and I'm not going to complain about that whatsoever. A couple of things. Um, let's see. So we click on this show more details button. Um, you know, One of the things that might confuse some people is it says, okay, projected return 14%, but your discount is 12.3%. That just has to do with the way math works, right? Like if you have a discount from a number, if you have a 12.3% discount from a number to get back to your original number, it's going to take 14% to get there, right? And so it is. A lot of people see, oh, I'm getting this for a 12.3% discount, and so that's my return, but that's not the case, right? It doesn't work quite like that. And then the annualized returns are just because if this gets paid back sooner, you still get the full 14%. And so, if that's why if it happens in 2 months, this is just multiplying by six and multiplying by three, multiplying by two, depending on the time period, right? But so you can see timing wise, there's the opportunity to make really great returns if in the instances where they get redeemed early. And that would just be when the property sells quicker than they expected, or really they might expect to sell quickly but be asking for extra time, just in order to be sure that it does. And that's sort of the use case for, I think, a lot of the people that are going to use this, to take the money out of their home. Is they have a home, they're getting ready to sell it. Maybe they want to do a couple of things to it, and so they need a little bit of cash to, repaint or some new flooring, something like that. So they don't have to sell at a big discount. They can sell a little bit of their equity at a little discount, get access to that cash when maybe they can't get a loan against that equity, um, either because of their income or qualifying, or because it's too high. Well, no, I guess that'd be the main reason, or because you don't want to refinance the whole loan and maybe they don't have access to a HELOC or something. There'd be a lot of different reasons, um, but anyway, it gives them access to that cash right away, keeps them from having to fire sale the property, or just sell quickly at a discount because it's either not fixed up, or they just need the money to hold it. They moved out, they're doing something else, they need to hold it for the term, and they don't want to have to just take a big discount. So I think there's a really good use case for the demand side. And because of that, it is a little bit more the cost of capital seems high, right? Like if it's paid off really quickly, if I'm making an 84% return, that seems like a really high cost of capital. But on the flip side, it's allowing the homeowner to not have to sell the whole home at a discount. They're just selling a small piece of their equity at a discount. So I can see this just being um, a really widespread need for this. And I think it probably is more obvious to me because I do work in real estate and I see homeowners selling properties for less than they could be getting all the time, and it's often over the lack of, 5, 10, 15, $20,000 could change the situation completely. Either they just don't have the time and they just have to take the first offer that they get, or they don't have the money to do some really, really simple things that would make it go quicker. So, yeah, that's all about that. One of the things I always miss on here, I always keep clicking this show more details and then being like, why aren't there more details? You have to click this little button here. It's something I should probably let Matt know. That's the co-founder who I mentioned. Because I think that's, to get into this part is always a little tough. You got your pictures. I think it's a very nice property. It's uh, 2017 build. Um, the let's see the details here. Let's see what we got that I wanted to mention. The leverage ratio, this is actually only 60% leverage. When they're giving you this leverage ratio, that is the current mortgage, right? There's a first mortgage on this property plus the amount of whatever they're taking, whatever Saul's Lot's giving them. Those two combined as a percent of the as a percent of the appraised value, right? And so all of this works off of the appraised value, not necessarily the sale price of the property, right? And so this was appraised at I think it was on the other page, but at 435. And so that's what that's what the discount is from, is based on that. And when it sells, it's also still, you're just using the appraised value. You're not using whatever it sells for. And that seems to be good in this case because it looks like they're listing this at 400,000. Although it is a coming soon hold, it's not necessarily listed. Um, Although earlier I thought that I saw, yeah, I don't know. This is kind of um, a funny status. We don't have this status where here in San Antonio for our MLS. But even if they sell it for 400,000, that sale price doesn't affect the amount that we get paid out from the DAC, right? And so that was something that confused me initially, and I think it's important to understand that. Let's see, what else? Oh, and so, but this it's 60% leverage, so it that the instances where the sale price could come into play is if, okay, it was grossly off when they were appraising it and it sells for much less than you expected. And they don't actually have enough money to pay off the mortgage and the DAC. That's why it's important to have a decent chunk of equity in between, right? That's why they're not selling up to a 90 or 95 leverage ratio. They're being conservative. I think the 80 is the highest they'll go, but in this case, having 60, I mean, it makes this, um, that it makes this a pretty compelling deal, right? It seems like it's going to be tough to get hurt based on that. But I'm still going to go through the financials. I'm going to go through the appraisal. Understand. Uh, just to understand what the deal actually looks like that I'm getting. They have the financials tab. This is kind of funny to me because they're not. This isn't one. Let's see. It's not, you're not actually holding it for a long period of time, so this growth doesn't matter, right? But this is set up so that in the future, you could also buy pieces where it's not, you're not expecting it to pay off soon, and so each year they're going to do a reappraisal, or they're going to do a reappraisal in the future, and you're going to, the redemption would be based off of the inflated price, right? The new appraised value in the future. And so that's why they have this built into this, but it's not really applicable to what we're doing here. Um, so this is mostly the same info that we saw over there. They give you a little bit of information on the market. Um, for these deals, I'm not doing the same kind of due diligence that I'm doing on an investment property that I'm planning to hold long term, or even that I'm doing on the discounted tokens for flips, right? Because the payout is going to be based off of the appraisals. They provide us with an appraisal. I do look at some third-party websites to make sure that that value looks something similar to what the appraised value is. But then I also wanted to go through all their documents. This one is what they call this is the actual agreement itself that's in place with the it's the one that's in place with the uh, this is what's creating the interest that we're buying. Um, you know, uh, I retired my law license a long time ago. I no longer give legal advice, so I'm not gonna like go through this and like tell you, what about the details or anything. I would, if you're going to invest on Sol's Lot, I'd encourage you to read every single page of this and try to understand. It's a dense document, and understanding everything that's going on is difficult. But I'd very much encourage you to do that. Which reminds me, please like and subscribe. And in the details to this video, there is a link to every site that I'm currently investing in fractional real estate on. Uh, just because I invest on those sites doesn't mean that you should. You want to do your own due diligence on all the sites and also on any properties that you might buy on there. Just because I do or don't buy on any of the sites or any particular properties doesn't mean that's the right answer for you. Um, don't ever take my word for it, right? You always want to dig into all of these things on your own. Uh, it's part of the reason that I've tried to create this community. Speaking of which, I do have a link in the description to this video to the Discord that I have set up. We've got about 70 fractional real estate investors in there now. It's growing almost every day. We get new people, and but one of the reasons that I'm trying to create this community is so that we can all sort of police these uh, platforms and opportunities together. And if we see something, we can talk about it. It's very a lot of these deals are complex, especially the contracts involved, and so I think as a collective we're much more likely to get things right than me just doing this on my own. And I think that I'm trying to share my insights and thoughts on these deals, but hopefully getting a real good community going where other people are doing that as well. And I think we're seeing that more and more on each of the different platforms, and I think it's fantastic. Um, and I think if you're invested on Lofty or you're involved in that platform at all, it's really become apparent over the last several weeks how important it is to have other investors that are active in the space, looking for problems, sharing their thoughts on it, willing to come up with solutions, right? I mean, I think that there is a real need for us to work together. And if you think about, investors in real life have their industry groups. I've always been parts of different real estate investor associations and whatnot. And so, having something, especially where this is a very new industry, I think it's important to that we share this. So if you read through this and you have questions, I'm happy to talk about any of this stuff. But again, never giving legal advice. But it is it's challenging to fully grasp all of it. I think listening to Matt talk about it, he's done a whole bunch of lives on X where you can just ask him questions on there. I think he's very well versed in this, and obviously you don't want to just take the platform owner's word for it as well. You want to make sure you're really understanding what you're getting. But it is it is available for you to read and really understand. The other thing they give you on every single one of these is an appraisal. This is what that price is based off of. You want to scrutinize this just like we always do when we're looking at every property. Sorry, I just froze real quick. I was just saying, you want to just scrutinize this appraisal just like you would with any other. We want to make sure that it makes sense in because the value this is what they use to create the value of that DAC and our redemption. Um, we just want to be certain that when that property sells, it's going to be somewhere near this price, right? And because, especially on this one where you have a really low leverage ratio, it's not going to be, uh, I'm not going to be overly concerned. But if it was one that was a little bit tighter, then I'd really want to make sure, okay, that there's enough equity that there could be a little bit, an ability to still sell and have the money to pay that off. But so, but they provide these on every single one. They also give us this. Nope, nope. Where is it? This Property Explorer, which I think is kind of interesting. This one gave a much higher value estimate than what it appraised for, and what it looks like they're trying to list it for. Now, one of the things that I did wonder, especially because words is coming soon, is how real this number is, or if this is like they're doing this to try to, it says it's been on here for 18 days. It's very confusing to me. We don't have, like I said, we don't have this. I want to actually see if it's on Realtor too, like that. We don't have that status in our MLS, and so I don't really know what to say about it. But let's see what it says here. Oh no, it says off market here. And then it has a much higher estimate of value. So I don't know. Maybe that 400,000 doesn't actually have anything to do with what it's listed for. Um, I'm really not sure. That's interesting. And then did we have any? I don't think it says. There's no like place where it says, yeah, it tells you about the property itself, um, but not anything about like what it's listed for or anything like that. That'd be interesting to see though, like, having a little bit of more information about like what's the plan with the property? Is it already listed? When do they plan to list it? Do they need to do something? That sort of thing, for people like us who just want to dig into all the details. Um, but again, this value estimate, I know a lot of you are probably familiar with House Canary if you're lofty investors. Some of you like it. Some I know there's a lot of people that don't like it, but it does give you like really good detail about where the other comps are, what they're selling for. So it's just another piece of information on that. And again, if I'm going to buy into this, I'm going to look at this on every single one. This platform is going to be one that I think I start to use more like ground floor, where I'm not doing a ton of due diligence on each one that I buy. I want to understand property value. Like it's not because we're not trying to turn it into a business, right? We're not trying to use this as a rental. We just need to know we're buying it. We're buying a piece of this at a discount. It should be for sale. Is it already for sale? Is that price make sense? Should it sell reasonably quickly? That's the sort of all I'm trying to figure out. I'm not trying to really go into, is this going to is it a good long-term market? All of that sort of stuff. So it is, you can see as I'm going through this, I probably won't end up doing a review of each new property that gets listed on here in the same way that I'm doing on Mogul or Lofty or any of the other sites that I'm on, because there's just not, I don't, I think the due diligence just looks different, and I think it's just going to be much less interesting, right? There's not going to be a whole lot to think about, because it is just, is this priced right, basically, right? And I think the returns are just also much more clear, right? We know what our discount is. There's not going to be any fluctuation other than the timing of the sale. Um, they give us a copy of the performance deed of trust. If you don't, if you're from a state that doesn't have deed of trusts, a deed of trust is basically the same thing as a mortgage. It's the security instrument that gives you the right to foreclose on a property in certain instances. In this case, it's not, it's a performance deed of trust, and it's it's not tied to a promissory note, right? Because we didn't make a loan, but it does. This is where we get the right to foreclose on the property if it's not sold and redeemed properly. Now, again, that's you want to actually read through this document, truly understand what your rights are. That is just very high level explanation of what the document's for. But you're going to see this on every single one. Um, this is a public document, right? This has been recorded. It is. I don't know, one of the things that I really like about this platform is they are, you know, I'm always talking about doing our on-platform due diligence and off-platform due diligence, but because of the simplicity of what we're buying is, I mean, it's not a simple transaction, but the interest is a, it's not, we're not worried about any income coming from it. It's just the value of that equity. Because of that, there's not a lot of due diligence that we need to do, and they're really giving us almost everything. I want to verify things as much as I can off platform, but they're giving us most of what we need to know to make a decision, at least what I need to know, like what makes me feel comfortable about it, right? And so, um, I like that a lot. I like when I have, that they're sharing everything, and then there's a title opinion letter as well, which I'd like to see this provided with some of the other sites. We're not always given, you're not given these documents. You're being told certain things were done, but so anyway, I like that both of those are provided. There's really not a whole lot else to say about this, right? I mean, it is this isn't me analyzing an investment property. It is an investment in real estate, but it is just I'm just buying a piece of discounted equity. Um, and so, yeah, that's it. I think I'm going to pick some of these up. I'll probably pick up 10 of these so I can make I don't know. Last time I just bought one, and like buying just a $25 investment in it, it's like I want to, whenever I'm spending the time to do this, make it at least, a little bit worth the time. And Um, but it'll be interesting. I'm not going to put a ton of money on this until I've, gotten several redemptions and I feel comfortable that the platform works the way I want it to. That everything is very much an experiment, right? Because it is, um, even though I think that the concept and the idea is, I think it's a really elegant solution to a problem that exists in the real world, and I like it a lot, but at the same time, it's just unproven, right? And so for me, I mean, you see me do this on every site, right? I'm just not putting a whole lot of money on any single property and on any single platform. It'll be a while before I'm putting some real portion of my net worth really into any of the fractional real estate sites. Um, but that's me. I'm a very prudent investor. I'm trying to uh, take minimal risk, and the other thing too is I want to try every single platform that's out there so I can share my thoughts on it, and find the ones that I think might work well, and like I said, I mean, talk to everybody else out there and see what's there. So I don't want to, at no point am I gonna, it'll be a while before I start to really dump money into some of these, but I think that I can imagine this being a platform where we start to see hundreds of properties roll through the platform every year, and over time maybe significantly more than that, right? I think the market for this is huge, and so it's just a matter of execution. And because of that, I really like that, it's very small amounts, and so it may be that I'm never buying big chunks of any of these. It is that I am spreading it out over a ton of them, kind of like what I'm doing on ground floor, right? I mean, every week you see me buy 5, 10, 15 um, pieces of that many mortgages, and I can imagine doing the same thing on here, buying little pieces of a whole bunch of them, getting some good diversification, also really getting that sort of average return where you're getting a higher return on some that pay off early and a lower return on ones that pay off later. And even the ones that pay off later, still a pretty decent return, right? I mean, like if you think about, 14% relative to any sort of more conventional investments that you're making, it's a pretty good deal, at least in my mind. I think that's relatively attractive. So anyway, I think that's really all I have to say about this. If you're investing on here, I'm interested in your thoughts on it. Does the concept make sense to you? Right? Have you dug into the documents? Hopefully, I'm not the only one that goes through and really reads these things. Um, I found a couple of spots where it seemed like there were just blanks in it, and I think that You see that all the time in when I did work as an attorney, like you'd get that sometimes. Sometimes you'd be litigating on a contract that had gone through several revisions, and somehow there was still stuff missing, right? So like anytime you have these 70-page documents, you're going to just have errors, right? And so nothing that I thought was like actually causing a problem for me, but again, you want to look through them yourself, make sure you feel comfortable understanding what the terms are, and what your return looks like. But so for me, the combination of doing that due diligence and then also just dabbling a little at first, right? Just experimenting, just buying a little bit. That's the way that I try to make sure I'm not getting hurt in the long run, because I think the platform risk here is the real risk, right? I think, and I guess that's what I've been trying to say in general, but it's you know, the the interest in the property and the way it's set up. They've taken a lot of the risk out, provided that everything works the way that they want it to, right? The way that it's set up, that the documents are enforceable, that the way they are, that that the redemptions happen properly, that all those sorts of things are the bigger risk in this scenario than actually does that property sell for enough that I'm getting my money back, right? Like I think that's actually, I think in my mind when I'm comparing them, yeah, it's the actual platform and structure that is um, that makes me less certain than it is, okay, what is my piece of equity in this property worth what I think it's worth? Because in this instance, and in pretty much every instance that we're going to see on here, the answer should pretty clearly be yes, because that's what Saul's law, that's what that they're actually doing, is verifying that, getting the third party appraisal, digging into that. And so I think that as much as I appreciate that they're providing it all for us, I think over time, as I start to trust the platform, it will be less and less important to dig into each one, and really understand it. Because for me, looking at it, the way I am today, I think what I want to make sure, and why I'm not just going all in on these, is I want to make sure that the whole thing works the way it should. I think I've said that in as many ways as I can think of saying that, and so hopefully that's clear. Um, if you're excited about this business model, drop a comment in the comments. I do appreciate when you guys do that, or jump in the Discord and talk to me about it. Um, is everybody else as impressed with this as I am, or is it? I mean, I know I'm just kind of like have a little bit extra level of nerdiness when it comes to a lot of stuff, and as much as I hate financial engineering when it comes to like tricking people into buying investment properties that they shouldn't be. This is a different kind of financial engineering where they're just structuring a deal that makes a lot of sense for both parties. Um, it's not the same sort of thing. And so I know I was talking to somebody and they were like, well, wait a minute. I know you hate financial engineering because I talk bad about it all the time, right? Like, but it's not the same here, right? I don't believe we're creating a fragile structure in the way that we're often doing it when we see some of the rent credits or strange financing, agreements and stuff like that we see in some other platforms. Um, I think that this is just uh, a very it's a unique solution to an issue, and that's it. So anyway, let me know if you like that as much as I do, or if you think I'm just a giant real estate nerd because I get excited about this one. You can tell I really want to see this platform succeed. And one of the biggest reasons is I know I have run into so many homeowners over the years who could have used this, and because something like this didn't exist, ended up selling their home for, instead of selling a piece of their equity for a 12% discount, they might have sold their whole home for a 10 or 15 or 20% discount. Because sometimes that's the difference between, having a home that has, that you have a couple months extra to sell it or not, or you've spent the money to, paint it and carpet it and that's it. Like sometimes just a small amount of money makes all the difference for homeowners. And in situations where they don't have access to credit and they don't have cash, um, you know, you see it all the time. I mean, it's basically what like um, Open Door and Zoom Casa and like all of those companies are basically making their profits on the fact that these people exist that don't have the ability to get their house ready for a sale because they don't have access to capital. And so instead, what they're doing is they're just coming in and buying it, doing that work and reselling it, and presumably making a much bigger profit because they're putting a lot more capital at risk to do it because they buy the whole property. So anyway, uh, way too much rambling for me tonight. Sorry about that. And in any case, until next time, I will keep making mistakes so that you don't have to.